No, in the pan. All right. So I'm pretty much drawing a schematic, and in this specific schematic represents a leg, a leg of the market. So I'm sure you watched it in the videos already, but let me just go back to it. So in the financial market, be it that you're trading VIX, if you're trading VIX or you trade Forex, each and every market operates in structure. And when I say structure, I'm basically specifying that the market breaks a high or breaks a low. And that's what we call structure. Because each time the market breaks a high, it goes to a new price. And each time it breaks a low, it goes to a lower price. So that's how the market moves in price. In going to higher price and lower price. Always moving from discount to premium, premium to discount. It moves in waves, right? So it's all a base of an algorithm set that controls the movements of the market. So what we do as traders, we identify the trend and the order flow. The order flow is basically the up-down movement, and the trend is basically a specific movement within that order flow. So the trend could be an uptrend of a specific order flow for an uptrend, and like I said, uptrend are basically the market breaking structure. So we have a high here, and this high put in this current low, this low put in this current high, and this current low was responsible for breaking this high. So I'm gonna use this trend channel that we have here to identify the current movement of trend, which is basically an uptrend. The market consecutively and being consecutively breaking highs here. So systematically, it does the same thing over and over, breaking highs. And in an uptrend, as the trend states and as the trend seems and looks, we are expecting the market to pull back and we wait for an entry for a buy. But this is just to catch a grasp on trends in market. Now, we realize that at this particular point, this high, the market failed to continue higher. Hold on. Someone join the meeting.
No, I mean, sorry about this. No, full there, like, to close out that opening.
Okay. So we can see that the market broke high here, went higher, pulled back, broke this high, went to a new high in price, broke high here, went to a new high, and we're seeing that it created a new high, and the market, instead of breaking that high, if you realize through observation, these lower were never taken out at all. So these lower were never taken out. The market at no point pulled back to take out these lows. However, this low was the only one that was violated. Systematically, the market should have pulled back, not taken out this low, and continue going higher, continuing the uptrend. But no market remained stable, no market remained functional, remaining going in the same consistent direction over and over again. It There has to be a rebound effect for it to pull back, bounce again to go higher, just like a ball going up and down. Each time it touches the surface of the ground, it gains a up thrust force that gives it a momentum, and it's the same way. As gravity falls and touches something, there's an up thrust force that gives it back that momentum for it to go higher or keep bouncing. It's the same thing as the market. As the market bounces like a ball, it goes up, it have to come back down. It goes up, it have to come back down. Right? Now, we're seeing here that this trend here was violated. So we have a violation of the trend. And that violation happened when the market did something unorthodox by going against the law that put in this high. So observe the movement. At first, a buy initiated from here, so gave us a break of structure, created a new high in price, pull back again, did the same thing, push, breaking this high, which is a breaker structure, a new high in price. It pull back, and just like in this particular area, it never pulled back and took out the low at this point. It just pulled back, continue buying and taking out the current high. So the moment it went against and distributed immediately after breaking the high, this high here, so which is the last breakup structure, I would call it. But this would be the last breakup structure in the trend. So I'm gonna write it.
So
That's a
Javon brand new, like brand new, new, new.
not really, but him start off the you can call it that. But there is so much things that's going to be very insightful to this because as I say, I go right into advance. I not plan to stay long. Just a try to go through this quick and fast. I'll run the next session again, but kind of long overdue. Now, each high that is taken out is a breaker structure. And though it looks very easy by the schematic I've drawn, it's not going to be very easy for new traders to spot them based off the structure of the market, right? But anyway, focus on the formula, because this is the formula essentially. So here, the market went against the low and distributed, and what we call that the area where we get the last breakup structure in the trend, and the market distribute against that particular low. We call it a market structure shift. And as straightforward as it sounds, it's exactly that. It's a market structure shift. It's a market structure shift, meaning that the market is now shifting from an uptrend and initiating to start a downtrend. So the first initiation is where the market failed to go higher and breaks the low. Once it breaks this particular low, means that price distributed with sells and closing below this area. And that is our confirmation that we had a shift in market structure of that uptrend. Now, as the market shift outside of the trend, it will pull back to test premium areas of the previous area that it descended from. And within this zone now, you would have we have a thing what we call premium and discount when we're looking at the market. And we normally use premium and discount based off primarily based off the previous highs and previous lows of a breakup structure or market structure shift. It doesn't matter whether it's a market structure shift where you have a break, because a market structure shift is a break, just as a breakup structure is a break. So wherever you have a breakup structure, we normally use a tool we call the Fibonacci retracement, and we put it from the low to the high, and we would use that to identify the market in a specific area above 50% or below 50%. So in the sense of a buying market now, we look at it, like retail, like wholesale. You buy something at a discounted price, and discount would be below the 50% margin in a buying market, and you would sell something above the 50%, and above the 50% would be described as premium. Just like you buy something for cheap and you throw a rim span it, you buy a car, you throw a rim span it, you spray it up. You buy it for 200,000, spray it up, throw some rims on it, you add some equity to it, and you sell it back for about $500,000-$600,000. That's premium price. So it's just a way of now converting that concept into action by using the tools provided by the trading broker to use these things to analyze. Nothing is hard, it's just a sense of just understanding the characteristics of what laws govern them and what formula is needed to operate this medium so you can use it to make money. You basically advantage. Right? Alright. Now, just looking at this, we had a market structure shift here, and I drew the Fibonacci retracement from the previous high to the current low so I could identify when the market pulls back, it will pull back into the 50%. And while it pull back into the 50%, this pullback, this leg that you have here going up, this specific leg, just picture that this specific leg that you have here is a replica of this uptrend right here. So whatever is happening on this specific pullback right here, that pullback here to retest into the 50% is basically the exact same thing that happened out here, because essentially what you may not know is that the market keeps doing the same thing over and over again. Because though this is an uptrend on the external market going up, this specific leg, if you go on a lower time frame, you're going to see it as an uptrend also. So this was a minor uptrend. And in this minor uptrend, for it to confirm that the sell has begun, you have to identify where you had a market structure shift within this leg of the market and this trend, so you can catch a perfect entry, essentially a sniper entry for a sell as the market moves along. All right. Like I had mentioned, primarily, what we have over this side versus what you're looking at right here is basically a leg. So this up movement that you see here is basically the trending movement that you see here. So I just did basically a breakdown of the external schematic. So this up movement that you saw of this specific area that I draw on the schematic over this side, this is the representation of what is happening, just by looking in a bit at structure. And the same thing, just like you see this leg here, it's the same thing happening on this specific leg going up. So you have to learn how to kind of separate, how you separate looking at external structure and internal structure. Because if I were to mark off the specific external high, I would say this here is the external high, just as this would be the external high right here. This would be the external low, just as this would have been the external low. And then this would have been the correlating low coming from this specific high, just as this high would put in this current low that we have here. So, and then these little dots here would have been the internal structure that we're looking at as the market is moving along and tracking. So the internal structure has to correlate with the external structure. You have to learn how to combine the two so you can take trades and catch successful entries. You're going to say something?
Uh,
You're saying something? Have any questions? All right. All right. With that said, let's get into looking at a specific market structure. So let us first identify, just by looking on this specific pair, volatility 100, and let us speak firstly, before we get into structure, let's speak about time frame. So this pair is volatility 100. You can just go to the search symbol search bar here, go to Deriv, and you can look for the pair. You can choose the one you like or choose a pair that you want to mark up. So volatility 100s. So my choice is going to be volatility 100. The mark the market operates in sequences of showing you how price operates by via time frames. So we look at these time frames up here from the 24 hours. I've starred all time frames, a matter of fact, so I can do detailed markup from the highest, which would be the 24 hours time frame, to the 8 hour, all the way down to the 1 minute. And the 24 hours basically show you the movement of the major movers in the market. So the higher the time frame, the heavier the money. That's where the real money is actually happening. So each candle in the market on the 24-hour time frame presents 24 hours of action, 24 hours of money. And each candle has a countdown on it. And we can see the current day candle here. We have 18 hours and 18 minutes and 12 seconds, 11 seconds until this specific candle close. That would be essentially by, um, we would say, by 7 o'clock this evening, because the new day has started. It's now the morning, Wednesday morning now. So by 7 p.m. this evening, this candle will close. So each candle represents a day. As it says, 24 hours are the 1 day candle. Each candle represents a day of movement. The 8 hours represents 8 hours of candle action. So each candle on the 8 hour time frame represents 8 hours of action. The 4 hour candle represents 4 hours of action. Each candle represents 4 hours of action. The 15-minute candle represents 4 hours. Oh, the 15-minute represents 15 minutes of action. So the previous 15-minute candle was 15 minutes ago, and that will be representing 15 minutes of action, right? All right, cool. Since you guys been really here and ask no question, I assume that you guys copy what I'm saying.
Kung mangyayari sa Manila po, next time
All right,
naman po
all
about
right,
those.
okay, all right. With no further ado, let's get back into going back to the highest time frame. So as a trader, you should always be observing the market from the highest time frame, so you can get a you know understanding of what the market is doing and the order flow of where it's going. So first, we can identify the external market structure movement, and we can see that the market was previously in a uptrend via these breakup structure that we have here. Breakup structure here, another breakup structure, and I can see that we also had a last breakup structure right here. This breakup structure is the last one. Why is it the last one? Because this is the highest point it went, and we can see that the market failed to go higher at that particular point. It never broke structure going any higher. And we can also seek to identify that the external low would have been this low, and this would have been the external high. So essentially, on the external market perspective, if I were to look to say I wanted to see the market go for a sell on the external market, when I say external, I mean on the 24 hours, because each candle represents a structure, So if they are marking these external highs and market breakup structure, these candles that you see, these green candles that you see going up here, each candle wick, let me zoom in a bit. So if they are marking the external structure, each wick of each candle, the wick is basically the tail part of the candle. I would call it, instead of the tail or wick, I would say the highest point of each candle represents a structure. So that is also a breakup structure right there. And this is also a breakup structure. And hold on. This would be the last breakup structure of this specific candle right there. And why do I call it a breakup structure? Where the candle opens and the body closes above the highest point of the previous candle. And by the body, I mean the body of the candle that carries the color. It carries the weight or we traders would say it carry the price. It carry the main price. These candle wicks that you see here are basically rejections. So the body is where the true price closed. So wherever you see the body of the candle, the entire red body that you see here, so this is where the candle closed. So once the body closed above this point, we call that a strong close. And where you see another candle wick close above another wick, we call it a rejection. So we're seeing that it failed to go higher at this specific candle. So we call this a rejection, and it doesn't only reject, it also sweeps. So the market goes up, sweeps liquidity or sweep the money that is above this candle. Whatever money is left there, it liquidated that funds, and it's now heading for a sell. But let's focus back on the current internal trend, because this is actually an internal trend. Where you see me marking these breakup structures. This is also a breakup structure. So we had a final breakup structure at this point. A breakup structure right there. Now this candle was the candle that broke structure. This specific candle, that green candle right there. That's the last breakup structure. Now that candle that broke structure, if we're looking to confirm a sell on that specific candle, we would be looking for a candle close below this area right here, where in which we got that candle close. Now, once we get that candle close, what we would be looking for to take an entry would have to go to the lower time frame to see what is actually taking place. Let me go back a bit to find it. Here we are. Let me delete this. So here we have the last breakup structure. And here we have the area we are expecting a market structure shift to happen. And here we can see on the lower time frame, we can find the specific area with the specific candle that broke structure, giving us a market structure shift. This is the specific candle that caused that break. And while that is the specific candle that caused that break, we had a downtrend happening. This is a breakup structure of that downtrend. This is another breakup structure. This is also another breakup structure right there. So the last breakup structure, where the market broke structure, we're going to use this area as an area of supply, because that is going to be the last place that the market is going to go back and retest in an uptrend before it decides to sell again. Target marker. So the market gave us a market structure shift from the, so this is the last breakup structure. We get a market structure shift here. Market structure shift. Now the market pulled back to retest a previous, the last breakup structure that happened at this specific area. I will mark off the entire area of this green candle. And this green candle would have been an internal uptrend. So basically, I have highlighted the entire uptrend candle as my area of supply. On the 1 hour, that's what I normally use. That's what we always and normally use as our area of supply, the entire uptrending market. But we're not going to focus on that. We're going to focus on it as the market after, as the market going back to that zone. But what we are going to be looking at to catch our entry is the action that's actually taking place in this uptrend. So let us identify where the market started to break structure going up. So let me remove this marker. Now looking at this now, I can see that we had a candle body close right there. So this would be the last internal break of structure because this body closed below the wick of this candle. So therefore, if I were to look for the market to buy up, starting the uptrend, I would have to essentially get a market structure shift, which means a body close of this high. So this is a downtrend of these red candles going down. And if I were to get an uptrend of the candles now buying up, I would need a candle to distribute body close above this high. Now we got the market structure shift. I'm not gonna write it. And let us just identify where we had the last breakup structure. We had a breaker structure of this candle with this green candle here, and I'm seeing that this candle that broke structure after highlighting the highest point of it and dragging the line across, I'm not seeing any candle that closed above it. So this is essentially the last breakup structure. This candle, that's where distribution happened. And if I were to say I'm going to take entry on this candle now, all right, within this setup, I would have to wait until this candle itself closed, lower myself to the lower time frame, maybe the 15 minute. Okay, hold on. It appears I can't go any further back on the 15 minute. Okay, let's try the 30 minutes time frame. Okay, all right, so that's the candle that broke structure. I would have waited until this candle closed, and then I can't go any lower to show you guys the schematic of structure. But essentially speaking, this would have been where I would have taken my entry. And the candle that broke structure, the highest point would have been my stop loss. Highest point would have been my stop loss. And my aim would have been can aim for maybe a 1 to 10, 1 to 8, or essentially you're aiming for the last year with the money.
Watch out, I saw this a couple of big.
Azani, Kenny,
Yeah, bro, I'm there, man.
oh, Kenny, share your background that?
Yeah, I'm more like because I'm mute my man.
All right, good. Just mute your mic, guys. So we're gonna get into the meeting. So this evening we are going to be talking about advanced setups and how to identify and taking cleaner trades on the market. Right? All right, so the pair of our choosing today is going to be volatility 10.
Okay, sorry, please, can you also record it so that after the meeting we can also watch the playback?
Yes, the meeting is currently being recorded.
Thank you.
All right, so let us start from the 24 hours time frame and let us speak a bit on well, looking at the external market structure. So based off what we can see, just looking at the external market structure for volatility 10, we can see that we have a major external swing here, this particular low, and we also have a major high at that point, and this is the final major low. So we have 3 points which we will call the external points of this specific structure. So what denotes that this current market structure on the external time frame on the 1 day is a bearish market is the break of structure. Doesn't matter how many it is, you just want to identify the previous break of structure. And if the previous break of structure shows you that there was a, or the previous market shows that there was a break of structure, that alone should tell you that the current market is bearish. Now, based off how we apply the principle of premium and discount in the market, you guys would know that above premium in a selling market or a bearish market, your point of interest is going to be at the 0.786 zone. As we mentioned before, these areas, the 50%, the 0.618, the 0.786, these are all key levels. Key levels that is denoted by this high to this low that caused this break. Or for that matter, wherever there is a break in market structure, as long as you identify that there is a break and you drag your Fibonacci from the high to the low or the low to the high, you can find the premium or the discount within that specific swing. So we're looking at the premium and discount for the 24-hour market based off the external swing. So be the case that we know that this market is a bearish market. It's in a bearish trend. And if we're expecting this market to be selling, then we're going to be tracking and identifying where the trend actually broke away, where it is the order block, where the market printed an order block. So we can seek to find a point of interest to take an entry. All right. This will help us to identify the highest point the market will go for which we can expect a continuation of the bearish trend. So we can use that as a marker to say, okay, if the market hasn't reached that particular point, we can use that area as our final take profit. So this is why we're also starting from the external time frame, the 1 day, before we start going into what's going on here with the current market. All right. So let's do a little bit of tracking and see where was the last trend in the market. So we're going to take a look of all the things that happened here before it gave us this external breakup structure. All the different trends that are there before we can identify where is the last significant trend. So we have an internal uptrend right here. Just highlighting it for sure. We have a downtrend right here. We have this bullish candle, though it looks as one 24-hour candle. If we go on the lower time frame, this candle is really an uptrend. It's going to show you an uptrend, I guarantee you. And these two sell candles that you see here is a bearish trend because each candle represents essentially 24 hours of market flow. So that would have told you that On this specific day, on February the 4th, this was a bearish market. And on the day before, February 3rd, we also had a bearish market. And then on the 5th, with this bullish candle, the market went into a bullish spiral where this is an uptrend. So small sell trend, small buy trend, and an uptrend here. So each candle, if it's green, it represents a bullish trend or a bullish market, separate and apart from the external trend that we would look at here and denote that this is an uptrend to itself. But within this uptrend, we have downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend. That's what's happening. So in order for you to take an entry, or you're going to refine your entry, aside from looking at the external market, you have to learn how to correlate the external and refine the external all the way down to taking an entry based off the candles. All right. Let me go in a bit more detail to this, and I hope you guys are taking note of everything. So I'm just gonna zoom in on this specific leg of the market, and by the specific leg, I mean the specific leg that we're seeing here with these sets of green candles. Or you know what? Scrap that. Let me use a closer one. Going back that far would be a hassle. Let's use this specific area for now. So we're going to use these sets of candles that we have here. Let us begin. So we had a sell trend, sell trend, sell trend, and we have an opening market starting with this bullish candle. That's a breakup structure of the 24 hours candle. That's a breakup structure right there. That's a breakup structure. That is a breakup structure. So this candle broke the structure of this candle. And now this candle is the current significant candle. This is the current significant one. Why is it significant? Because this is a specific candle that broke the structure of the previous one. So you can't highlight this, or any of these. You have to focus on the specific candle that broke structure. Now, we're seeing here that as this candle broke structure, the highest point of this candle was not taken out. Instead, the market swept it. So that would mean that if I were to say I'm looking for a long-term sell on this market to catch a trade, if we follow the principle of how the trend operates, be the trend going in a bullish direction or a bearish direction, we know that when a trend begins, it has to continuously be breaking higher and never pulling back to taking out the low that puts in the high. So this specific candle that broke structure here, this particular low should have never been taken out, should have never been swept. And we are seeing here that the candle pullback cunningly swept liquidity or swept any stop loss that was resting at this specific area. But that's not what we're focusing on. What we're focusing on is the candle itself. So this specific candle that broke structure, the high and low of this candle, there is a range. So this is the trading range of which you'll be focusing on. And based off how the market operates, if we get a break of this high, Here, you could have taken an entry and a retest for a continuation for the buy on the lower time frame, of course. And likewise, if market structure breaks the low of this specific candle, this would mean that, mind you, it's an uptrend. If it breaks the low, this would mean it's a market structure shift of this specific swing. So what you would be looking for to take an entry is the specific candle or the specific structure on the lower time frame that caused this shift. So you could have caught a piece of this sell, not all of it, because mind you, this is the 24 hours and this is a 24-hour candle. So if you were to catch the specific candle that caused the break in here on the 1 hour, the 15 minute, this entire sell that happened, be it small as it may seem on the 24 hours, this would have been a trade that could have made you $500, maybe even $1,000, depending on how you take entries on it. This small movement of these three candles would have been a great trade. Is everyone hearing me?
Yes.
Very good. So this is us refining the market, not just from the external standpoint, but also from the standpoint of looking at the candles as structures, because the candles are actually structures. Because with each candle, be it the time frame that you're on, whether it's the 24 hours, the 8 hours, each candle on the 8 hours represents 8 hours of structure, 8 hours of market. And if I were to essentially mark off the high and low of this 24-hour candle and go to the 15-minute time frame, you would see the amount of candles that has been traded on that specific day, that specific 24 hours. You would have seen how much candle it would have taken. And if I went on the 1 minute, just by highlighting the high and low of this specific previous 24-hour candle, you would have seen how much bullish candle or what structure the market created in that session of that previous day. On this specific day on the 24 hours, we are seeing that a lot of consolidation may have happened here. The market consolidated a lot. Not a lot of money was in the market at this point. There's a lot of rejections. So whoever was trading this specific period could have never looked to say they could have caught a long trade. Maybe she and the old lady entered the market and they lost quite a lot of money. And imagine this specific 24-hour time frame, this 1 day. Imagine the amount of manipulation that happened in this specific period, because you can see the massive rejection and then the small um, capital that was traded within this period. But anyways, let's go down to the lower time frame and take a closer look at what the 8 hours is saying. And mind you guys, when you mark up the candles from the highest time frame possible, it's it gives you a more precise, a more accurate look at where the market is reacting. It gives you a more solid low and a more solid high, a more solid break of structure than what you can identify on the lower time frame. And this is why you would mark these specific points on the higher time frame before you enter on the lower time frame to do anything else. All right. Now, just looking at the 8 hour time frame before we go any lower, we had the market structure shift here. Would have waited for the market structure shift. And once we got this specific distribution candle here, we all know that the market has to retest before it initiates a sell. So let's go a bit lower and see where we could have caught an entry on this specific pair. Now, just looking at the 4 hour time frame, we can clearly spot that we had two bearish candles. So this tells us that We have two 4-hour candles with 4-hour structure at play. And we're seeing that the specific candle on the 4-hour that caused the break is this 4-hour candle. Now, might I remind you that, as I mentioned before, that each candle is breaking structure continually with the other candle. So this candle is breaking structure. So this candle broke the structure of this candle that we had here. We had a minor pullback, then the market distributed, not only breaking the structure of this candle, but also giving us a major structure shift on the 4-hour. So what that means is that this would be essentially the last break of structure of this current bearish swing. So that means if this is the last break of structure of this downtrend with these two bearish candles, it means if the market distributes against this high and give us a strong body close, we would get a market structure shift that would indicate that the market is now going back bullish, which we can clearly identify that the market failed to do that with this rejection, with the candle not closing above this peak of this current candle that caused the distribution. Let me highlight it once more. Like I said, guys, this is advanced setups. Normally, I wouldn't be showing you guys this, but I had made a promise. Naturally, I'm going to fulfill it. So, your job here is to observe the bullish swing, which is going to be the retest after the break. And we clearly see that we had a break of structure here, which confirms it is actually a bullish swing. And naturally, in a bullish swing, this is now your current range, and this is now your current range. So this candle broke structure. The one thing you would be expecting is once the opening candle opens, it should continue breaking structure going higher as per the principle of how trends operate. They keep continually breaking trend in the specific direction that they're going. So what we'll pay attention to is what happens here, because we're looking for a break of this high if we're looking for a continual buy. But since we got a market structure shift, we're only hoping that the market will continue to sell. So definitely, I and maybe others would be looking for a sell in this specific range. Let me delete some of these lines as to not cause confusion. This too. Now let's go down to the 2-hour time frame and see what is happening. Because this is the specific point we would be expecting a break. And this would also mean that if we're expecting a break here, this should also be the specific point we should be expecting a reversal. Now, let's hit the 2 hours time frame. Here we are on the 2 hours. Now, on the 2 hours time frame, based off the range that we highlighted from the 4 hours, this is the trading range low, this is the trading range high. And what you can pay attention to is on the 2 hours, it shows as if we had a break, or a break as per what we would expect. But this is just the 2 hours. The 4 hours shows us differently. We're not gonna be dissuaded. We're not gonna be confused by a lower time frames perspective. If the highest time frame shows you that the close never happened, it never happened. So now we're gonna be focusing on looking at where we get a market structure shift. So we're gonna be focusing on looking at the bullish movement of this specific uptrend. We had a break of structure, and based off what I can see from afar, if I even highlight the high of this green candle, this was a sweep. We never had a break of structure continuing going higher. And even if the market did form this selling candle here as a form of support, the opening candle, which would have been this candle here, should have been a bullish candle that sweep the low of this candle and push up with a bullish momentum. So this would have already been the first signal, the sweep. Second signal would have been a failure to give us a bullish push and distributing bearish. And now you would be waiting because mind you, this would have been a sweep. So this would have indicated that this here would have been the last break of structure of the candle or the last break of structure of the trend. BOS. And what we expect to happen at the last break of structure, we expect a distribution giving us a market structure shift, MSS, and the specific candle that caused that market structure shift is this candle, that specific candle right there. Now, that candle, once the countdown timer has closed, and you see it close with strong body, that there is indeed a shift. Like I've said before, the market will always retest to continue selling. And just by looking at this from the 2 hours perspective, my entry would have been somewhere in here. But we're going to refine that. And the candle that caused the break, the specific candle that caused that break, which should be this candle here, your stop loss would have been at the tip of the peak of that candle. And you would be aiming for a standard 1 to 3. I would aim for a standard 1 to 3, but you could aim for more because, as you would see, the market basically aim all the way down here. So if I even was saying I was going to, probably I wouldn't have aimed all the way to this area. I would have aimed maybe for this specific liquidation right here because I would have seen an immediate fair value gap in this specific area. So more likely would have been my peak area I would have been aiming for. So as to not find myself in the predicament of incurring any of these pullbacks and be the case that we would be trading volatility 10 and we will be so confident in our trade and markups in the bias of understanding advanced structure, you would have no problem in using higher lot size or even bigger lot size to catch maybe, let's say, $300, $400 on a well prepared setup such as this one. But let's get back into refining from the 2 hours all the way down to the 15-minute time frame. So the specific candle that caused that break is this candle. And we are going to go in deeper to see on this downtrend what happened and where we could take opportunity on the pullback. Now on the 1 hour time frame, let me delete this. We're seeing that the market is showing us, let me bring this in, that we had an internal breakup structure here, selling leg, and we have a bullish pullback. So what that means, we're going to identify the high of this candle that caused the break as our trading range of the specific market. Since we won't be able to get any information based off these candles from the 1 hour, let's go down to maybe the 30 minutes. 30 minutes doesn't really carry a lot of information based off the candles. So let us go lower. 15 minutes. We need to be able to see some clear breaks. All right, now we're at our trading range. Refining our entry further. Now, as I remember speaking to you guys about, each candle represents each break. We're on the 50-minute time frame. So that means that each of these candles represents 15 minutes of structure. So this specific candle happened 15 minutes ago, 15 minutes before, 15 minutes before the current candle. So each candle here represents 15 minutes of movement of structure that took place previously. And we're trying to identify what induced the break of structure or the market structure shift and where that specific point happened. And we are seeing that on the 15 minutes, this is the specific candle that caused that market structure shift. And we can identify that this candle here represents a break of structure of that candle. So by my opinion, I would say this high should be protected. The market should not break and close strong above this area. And this last candle here before, which should have been a last down and up candle, because if you look keenly, you can see that the market did open as a bearish candle. And when it opened, more likely what happened is it began to sell. Then a major rejection came in. Buyers rejected, pushing up price all the way back to this peak till finally it closed here. So the market sold first, then buyers came in and bought up the market. If I go on the 1 minute, it should show as a down and an uptrend on the 1 minute. Close at this specific price, then the next bearish candle open here. So what that tells me is that this is the last down to up candle. This is our area of supply, and this is the high that should be protected. So therefore, this would have been, even without refining the order block any further, one could have placed their point of entry here, stop loss outside of the area of supply, and you could have been aiming for a 1 to 8, a 1 to 5, all the way down to take profit. This would be a 1 to 9. Let us refine this a bit further. Is everyone still here with me?
Yeah.
Is everyone understanding what I'm saying?
I'm with you, but I've not understood it very well. But since you say you are recording it, I'll maybe after this I will still watch the recorded one to get more understanding.
Okay, very good. Okay. All right, back to where we're at now. Now, this is a specific area. And mind you guys, don't forget, even on the 15 minutes, you do have external 15-minute swings. So these lows that you see here and these highs are external 15-minute. We're on the time frame, the 50-minute time frame. So this denotes that on that specific time frame where you see an external swing, that is a 50-minute swing. You can write it as a 15-minute swing in your description when you mark up, or you can choose not to. It's fine. And these candles that you see here represents the internal trend of the 50-minute. So this candle here broke the structure of this one. So that means that this candle now carried the trading range. This candle now was broken here by this distribution candle. Well, I guess in some way, you could just basically highlight all of this. Or I would just refine it all the way to, yes, refine it to that. That would be the one, the specific supply zone. It seemed as if just refining it there, the market would have never made it. You see, it just came as close as here. Okay, just keep it all the way to that zone. Now, refining this specific trend to catch the trend based off, to catch the entry based off the pullback into the market structure shift on the 15 minutes. In order to refine this, you would be looking at the trend giving you the last breakup structure. So we have a breakup structure here of that specific uptrend right there. This candle broke structure. Then we have this candle now, this bullish candle, giving us a final distribution of that final breakup structure. And we're seeing that it failed to go higher at that point. And this is the low of that candle range. And we're seeing that distribution happen right here. And within this specific area where the distribution happened, it never happened as just one candle, you know. So if you go on lower time frames, you are going to find a specific candle on the 15 minutes that caused that break, and you will be able to refine this even further. So as to confirming your entry, even more precise, and putting your stop loss at that high. And just as it seems, this actually takes a lot of work, a lot of patience, a lot of observation, a lot of time sitting and waiting for that perfect opportunity. And it has worked wonders because just waiting for that perfect moment where the market is not going to pull back, not even once, or even put you into drawdown, you have the ability now to probably go full margins. I'm not saying to be reckless. You have the ability now to risk more and see yourself making $200 in maybe even 5 minutes, 2 minutes, 3 minutes. What would take you 2 days to make it in a couple minutes? You normally would have to load $100 to trade. Now you can load at $10 and wait for a perfect opportunity on a specific trade with $10 and use $10 to make 200. Therefore, reducing your risk demand in using most of your capital to hold a trade to make money. And all it requires of you is the patience you have to put in to achieve this. All right, let's just refine this some more because now we had a market structure shift here. Now we now have a current market structure shift, and now the trend is now being refined. You would go nowhere. This of which I'm teaching, you will not find this anywhere else. Now let's go down to the 5 minutes time frame. 5 minutes time frame shows me the specific distribution candle, the 5 minutes, but I still want to spot it in the form of structure. Now let us go to the 3 minutes. Okay. Now on the 3 minutes time frame, this is the candle that broke structure, and we're seeing a bullish candle that pulled back before it distributed. Let's just hit all the way down to the 1 minute and see what the 1 minute is saying. Oh, look like I can't go any further back. Okay, the 2 minutes. Okay, the 2 minutes has shown me. All right, cool. All right, so on the 1 minute time frame, this is the candle that caused the market structure shift, right? Now, what I would need to happen, I would need, now this specific candle carries a range. It caused the break, and naturally it has a range. It's either it's going to break back to go bullish, or it's going to break this low to confirm that it's going bearish. And naturally, here it would be. This would have been your signal. And right after that candle closed, I would have been waiting perfectly right there. Stop loss at that high. And be the case that now I've caught this trade on the 1 minute, sorry, the 2 minute time frame. This small stop loss would have been so small that I have the possibility now to actually make more, because on the 1 minute, sorry, the 2 minute time frame, I'm already at a 1 to 2, almost a 1 to 3. And let me show you how much money that small movement would have made all the way from this high straight down to this specific area. That would have been a 1 to 14, catching a perfect drop starting from, let me see the time. The time would have been 6:58, 6:58 all the way to 11:20. Well, I guess it would have lasted a couple hours, but it would have made maybe close to $1,000, maybe $700, maybe call it $100,000 by my estimation, because this is a 1 to 14. So even if you put one entry in it, one entry would have made it maybe 4 to 5 bills. So if you had maybe 3 to 4 entries, that would have been, I'm not even sure, maybe over 1,000. Could have been a lot of money, right? So everything comes into perspective since the market of VIX operates based off structure. And if you understand how to read structure, not just based off external markets only, if you can read it based off internal market and track the movement of market, because that's all it is, you tracking the movement of market structure. It doesn't require news, the effect of anything else. All you're doing is tracking raw market structure. Once you're capable of doing that, no trade should be impossible for you. You should be able to trade not only deriv markets, you should be able to trade well trade, you should be able to trade Forex, gold, Bitcoin. Now, with that said, does anyone else or does anyone have any questions to ask, or is the information or the data transparent enough?
Yes. When you went to the 2 hour time frame, you showed a particular candle that caused a breakout. I was a bit confused because I was thinking the next candle should have been the one that caused the breakout. So I wanted to understand that one. Yes. See the candles, the red candles.
So this
The
is the
mhm.
breakout of the trend. I marked the breakout here, but this is the external break. So this would have been the external break
Oh,
of structure. So
okay. So
this
sorry.
candle not only
So
broke.
so the one you were talking about, was talking about the internal breakout.
Yeah, so the internal breakout has to also
Okay.
correlate with the external breakout. So this specific
Okay.
candle played that role of breaking not only the internal break, continuing the downtrend of this specific legs of bearish movement, because mind you, this is a leg of bullish movement. This is a leg of bearish
Mhm.
movement, but also within this leg of bullish and bearish movement, we cannot forget that this high and this low are external swings. So
Mm-hmm.
the specific candle that can break structure here of the internal swing and break the so the break structure of the internal and break structure of the um, external, that is a significant candle.
Mm.
That is significant. Now, just refining everything going further would make any well, I already refined it all the way to the 2 minutes. So there's no possibility of going any
Okay.
further than that. But you understood? Have you understood everything else, Reverend?
Yes, yes, yes. Like I said, I also watch the recorded one again, um, over and over again to get it where.
Okay. But essentially, in order for you to refine the accuracy of the trades that you're taking, it's always better to refine it from the highest time frame to the lowest time frame
Okay.
because you get the most accuracy and the most confidence in taking your trades that way.
So with this strategy, the trend lines are not necessary, are not important. Oh, drawing the
You
trend
can
line.
basically use the trend lines. I'm not saying you should stop. I draw them sometimes,
Mhm,
but you draw them just for notification. You don't have to keep them on the charts. You can just use them as a marker
okay.
just to identify because essentially speaking, while just looking at the market here, you can already identify that this is already a downtrend. But
Mhm,
this is also a downtrend.
mhm,
We also have a downtrend right here. This is also a downtrend in the market.
mhm,
And what I tend to normally do, just looking at this specific area, well, this is the candle that broke structure. This candle specifically, and this candle was broken there. So this is the last candle that has the last breakup structure. This would have been my range high, market structure shift right here. And all I would possibly need to do is maybe just refine it to the 1 minute and find a specific, because this is a tall distribution candle on the 2 minutes, but I'm sure on the 1 minute I would have maybe spotted the specific candle that caused that break, right? And then naturally,
yeah.
even if I enter here, my stop loss would have still been at the high. So when the market pulls back, I would have already been in the trade. And yep, so everything is about structure. As long as you identify structure very well, you should have no problems. Everything has to
Mm.
make sense, right? Everything
Yes.
has to make sense. So this was a last breakup structure of the downtrend based off the candle. This candle here caused that breakup structure. Naturally, the range is now between the high of that candle and the low of that candle. And we're seeing that we had a distribution out of this trend. What is the trend? This is the trend. That's the downtrend.
Mm.
And now we had a distribution out of that trend. Market structure shift right here. And once we get this market structure shift, this candle is now the trading range of the specific market. The market went here. Well, I guess on the 1 minute, like I said before, you would have spotted a pullback because this candle would have not only just been this bullish candle only, it would have been there would be some kind of pullback in here. Maybe on the 1 minute, if there was any lower time frames, you could have seen where there was a pullback. There is always a pullback. The market just doesn't continues breaking structure like this. It just goes to denote that it is creating structure, but just on a time frame that you're not able to grasp the order flow of that specific market. Right. So this candle
Okay.
is now the significant candle. Structure is broken by this candle, and it keeps doing the same thing. Last breakup structure here, distribution here. Yeah, and even maybe just assuming that you would possibly get this break, or maybe just seeing the market starting to distribute with this sell happening, you could possibly take a risk on it and be very much rewarded. So last week when you see me sending in setups, accurate setups, they're all based off it's not a strategy. What you're seeing here, Reverend, is just raw market structure. Raw market structure. That's all it is.
Yes, yes.
You can make a strategy out of it by waiting for the shift in market structure here. I guess you can call it a strategy. But this is all raw market structure. That's all you're looking at. Right? Even looking at this area that we have here, this would have been the last breakup structure. That's the last breakup structure. Never broke higher. Distribution at that specific zone. And somewhere in here would have been your entry. Maybe on the 1 minute. But just taking an entry there. Stop loss above the high that caused the distribution, which should have been that high. There you go. This is a 1 minute trade. It's all a matter of waiting. It's all a matter of patience. You wait for the distribution to happen. You wait for a shift in market structure to happen. That's what you're waiting for. This is your signal. That's all it is. And your stop loss has to be at the top of this specific area. That's it. That's all it takes. Nothing more, nothing less. I could go in more in depth, but it's just gonna be more of the same thing. Now, other than Reverend, who else understands everything I've just said? Azani, you understand?
I will rewatch the video. I'll watch it tomorrow.
All right, all right, Kenisha, you can rewatch it. Azani, I guess he too is also going to rewatch the video. Reverend, you said you understand, right?
Yes, yes.
All right, very
Yes,
good.
I do. I do. But like um my sister also said, I've been repeating it. We will rewatch the videos again because with this one we need to get it off, and like the way you just see the structure just like that, as if it's easy. So we also have to watch frequently to see if we can also get to that level
Yes,
and
indeed.
practice it consistently.
Yes, indeed, indeed. So, indeed. So, we're on the 5 minutes time frame here. Okay. Immediate. So, we have a sell trend. Last breakup structure. Sell trend here. Breakup structure here. Let's see. Let's break up structure at this point. Let's see, we have a bearish candle here, small bearish candle. So this would mean that that's what this is. This is basically a pullback area. So this is would be a 3 minute external high and an external low. All right, guys. So that's it basically for the meeting today. Reverend, I will edit the videos so you guys can rewatch it. But in the meantime, just
Thank you.
just practice what I've mentioned. Practice what I've shown you. You guys can rewatch the videos, and the formula is basically there. The formula is right there. Formula for success
All right, sir.
is right there, right? And when you guys make that million, don't forget about me, man.
Sure, sure. Yeah, thanks so much because getting this, what I've realized about your setup that it doesn't have that much of drawdown. Doesn't have
Yes.
drawdowns, and then the stop losses are always very low. So let's say you even enter with a lower time frame, it means you are risking just a few dollars. And if you go in for bigger one too, and you get it right, you make millions. Thank you very much.
You're welcome. You're welcome, man. All right, I'm gonna edit these videos, and you guys can watch them very soon.
All
All right.
right,
Just
all right, sir.
practice. Just practice
All right.
what I discussed. It's pretty easy, like I said. Start from the highest time frame. Remember everything. Start from the highest. Identify
Okay.
the external, then the internal.
Mm,
Identify where in premium the market should be heading to,
mm,
and just start marking up from where it's currently at. Because
okay.
basically, I believe on volatility 10 that we had here, we were, well, I guess I wasn't really marking up based off the perspective of
Mm,
looking for where it
okay.
should have been headed because this market is actually buying up,
Mm,
actually cleared everything.